The Securities and Exchange Commission, the SEC, has announced recently the launch of the Strategic Hub for Innovation and Financial Technology, which includes blockchain and cryptocurrencies. With the ever closer move to a fully regulated space, is now the time to be looking at crypto funds. Well, Demelza Hayes joins us now from Incrementum, a German investment and asset management company based in Liechtenstein. Demelza, first of all, just explain where we are in terms of the crypto space. We've just celebrated the 10th anniversary of Bitcoin, and unfortunately this is the first year, of course, that Bitcoin has seen losses for those that have been investing in the cryptocurrency. Where are we at the moment?
Well, year-to-date return is around minus 51%, so we have lost about half of the value of Bitcoin. Other altcoins are performing in a similar way. However, if you look at year-to-date, if you look at actually 1 year ago, we've actually held steady at above 6,000 now for over 1 year. So October of 2017, we crossed the 6,000 mark for the price of Bitcoin, and we've actually held steady there now for a year.
How important is it, do you think, the SEC and other regulated bodies around the world begin to see the importance of cryptos and start to regulate them? How important is that as a significant milestone?
It's a very significant milestone because once an ETF is released, it's going to adopt an entire new class of investors that previously were barred from entering this market. So if you look at the gold market, after the ETF was released for gold, it definitely had a great impact on the price in a positive way.
Talk to me as well about what it is that you're doing at Incrementum, because you've got these plans in place now for a crypto fund. Why?
We've had a lot of requests from our investors to allow them to gain exposure to cryptocurrencies. Cryptocurrencies are uncorrelated with other asset classes, so they're uncorrelated with traditional asset classes such as bonds and stocks. They are also uncorrelated with alternative asset classes such as real estate and commodities like gold. So basically this new market can actually help investors diversify away risk in their portfolio because it's just uncorrelated with other asset classes.
Why have you chosen now? Because it is still very volatile out there for cryptocurrencies. Quite often you'll see large single-digit percentage moves in a day. It must make it very difficult when setting up a fund like this.
That's true. That's a great point. We have been trying to set up this for over a year. It's just recently that regulators have become more friendly towards cryptocurrencies. And basically, we think that now is a fantastic point to get into the market, because if you look at the cryptocurrency market as a whole, there's been 8 bear markets where they've had a loss of more than 35%. However, each of those bear markets was a fantastic opportunity because the bull markets that were subsequent actually had, huge gains for investors.
Which cryptocurrencies are you going for? I know that Bitcoin still remains the benchmark, and it's separated by history as much as anything else. But we're constantly seeing new coins coming onto the market. What are you headed for in terms of how the fund is made up?
In the fund, we are going to invest in the most liquid cryptocurrencies, and that's basically measured by daily trading volume. So that's going to be Bitcoin, Ethereum, Litecoin, Ethereum Classic, Bitcoin Cash, Ripple, IOTA, Stellar, basically the top 15 coins, except for the privacy coins.
How agile is the fund? Are you going to be actively trading cryptocurrencies?
Well, since we're regulated as an AIF fund, alternative investment fund, we basically need to have a custodian bank that stores the cryptocurrencies. Now, this custodian bank is basically responsible for executing all trades, and therefore, since we have to move the cryptocurrencies between cold storage and hot storage on exchanges, this opens up the bank to counterparty risk on these cryptocurrency exchanges. So it's definitely difficult for us to continuously rebalance and to do active trading with our portfolio currently, because of the liability that the custodian bank will have to incur in order to execute trades. Therefore, go ahead.
So you do hold the real underlying currency?
We do hold the real underlying currency, exactly, and we do have a custodian bank, the only one in any of the German-speaking countries that is authorized to store cryptocurrencies, and they're actually liable for the storage of the cryptocurrencies. So basically, since they have to move those coins in and out of cold and hot storage, we reduce our active trading. However, we do have a basically a long portfolio, and we reduce or increase exposure based on our indicators.
Okay, look, Demelza, we'll have to leave it there, but thanks indeed for joining us there. With the majority of the markets in the Bitcoin and cryptocurrency space, that was Demelza Hayes from Incrementum, a company intending to build a fund and put it to market at the beginning of 2019.